Bitcoin is just the next evolution of another payment system.
Brace yourself, Nakamoto was the foundation.
What up guys, Nakamoto Crypto here. 2020 has been that crazy for Bitcoin and cryptocurrencies. We have seen Bitcoin drop from $8,600 in March all the way down to $3,600 to right now $28,000 per BTC 9 months later. Stay tuned, like and subscribe. We've reached the milestone of 400 subs. Let us please get to 500 subscribers. From January to March, Bitcoin was trading sideways as usual, starting the year at $7,200 per BTC to a February jump of over $10,000 and a subsequent crash which sent the price back down to the $8,600 range. From there, Bitcoin started trading sideways. Despite the February 500 million transaction mark that was recorded on the Bitcoin blockchain, with block number 616,064, BTC was still trading sideways until March 9th. Things took a turn for the worse from there. As the C-19 pandemic hit, the stock market crashed. A 2,000-point drop in the Dow Jones shook the entire global economy, and March 16 set the record with a drop of 2,997 points, a nearly 13% drop in the traditional stock market. BTC and the crypto market, on the other hand, were hit on March 12, with the price of BTC falling as low as $4,100 from $8,600. This was on Black Thursday. On March 13th, the trading volume of Bitcoin across the exchanges hit a collective all-time high as people were rushing in to pull their investments out of the crypto market to stay on the safe side. Bitcoin struggled throughout April to regain its highs, but a phenomenon saves Bitcoin and cuts the supply every 4 years chimed in and saved the cryptocurrency once again. Every 4 years, the rate of which new Bitcoins are mined halves. This was part of Satoshi's original genius design way back in 2009. When Bitcoin was introduced, the mining rewards was set at 50 BTC per block, an amount that halved twice already before that year. Since the total supply of Bitcoin is capped at 21 million BTC and most of that has already been mined, given that we are at 18.5 million BTC circulating out there, this reduced the rate at which new Bitcoins are minted and will ensure that there is a steady supply of new Bitcoin until the year 2140. And the third Bitcoin halving happened on May 11th of 2020. The mining rewards were reduced from 12.5 BTC per block to 6.25 BTC per block. And though traders were expecting the price of Bitcoin to skyrocket as it did in its previous two halvings, Bitcoin did not end up skyrocketing just yet. It was still trading sideways. So the volatility continued. The price of Bitcoin climbed from below $5,000 to slowly back up to the $10,000 range and just stayed there. The ups and downs continued throughout the month of June as the number moved from the 9,000s to the low 10,000s. As we entered the summer, July was the crazy month for BTC and the cryptocurrency world as the narrative shifted because a new form of finance was introduced, decentralized finance, and this took the crypto world by storm. And we saw DeFi protocols such as Aave, Compound, and Maker pick up the summer in what became one of 2020's biggest crypto crazes. They take the form of non-custodial money management platforms that allow users to lend and borrow cryptocurrencies. Part of the reason DeFi blew up this past summer has to do with the governance tokens that they awarded as a way to incentivize usership. So if you lend the cryptocurrency on Compound, for example, you could earn comp tokens, which would then give you a certain amount of power to vote on any proposals to upgrade the network, just like your traditional share market. But traders were more interested in the token's potential value than their ability to govern DeFi platform. And in this manner, yield farming was born. Traders began exploiting protocols to amass valuable governance tokens rather than lending or borrowing tokens. So by late July, DeFi had grown into a $3 billion industry. And this was thanks to the contributions of developers such as Andre Cronje, the creator of Yearn Finance, the Satoshi of DeFi himself. Yearn's governance token YFI was at one point trading at $43,000 per token. Even Andre Cronje himself said that this token is completely valueless. Do not buy YFI. But no one paid attention. As there was only 50,000 YFI tokens minted already, people chimed in with their money, driving the price of Yearn Finance from $900 all the way up to $43,000 per token. By the end of July, we have the introduction of NFTs, non-fungible tokens, and these were kind of a blockchain-based collectibles that became increasingly popular this past year with the rise of marketplaces such as Nifty Gateway and the virtual collection space Decentraland, which is a little like Second Life but with NFTs as a stand-in for real-world objects. But unlike cryptocurrencies, which tend to be fungible tokens and coins, any one coin can be exchanged with another coin for equal value, as is done with cash. NFTs are one-on-one, which give them a unique value. NFT sales hit $100 million in July and have been increasing steadily ever since. As the year went on, the devs found an ever more innovative use case for NFTs, from fractionalized digital art sales to collaterals for DeFi loans or even derivatives. And then you have the July 17th Elon Musk Dogecoin fiasco. In July, billionaire SpaceX and Tesla founder Elon Musk tweeted a meme about Dogecoin, which was a popular cryptocurrency that was created way back in 2014 by Jackson Palmer. And this caused the price of Doge to skyrocket, fueled by some TikTokers who added more fuel to the fire. But that was short-lived, as just a few days later, on August 11th, another billionaire shook the cryptocurrency world. MicroStrategy's own Michael Saylor decided to put $250 million of the company's asset into Bitcoin, raising its profile significantly, and marked a monumental moment for institutional investors to get into cryptocurrency. The company went on to buy another $225 million into Bitcoin, with MicroStrategy's CEO Michael Saylor stating at the time, "Satoshi is God's name." MicroStrategy received criticism in the traditional market, as most analysts in Citi actually downgraded MicroStrategy's stock in December, citing the company's disproportionate focus on Bitcoin, so they decided to distance themselves from MicroStrategy. This was only going to increase as September began to see Bitcoin climb as high as $15,000 per BTC, and the only way from there was upwards. On the 21st of October, 2 months after MicroStrategy started buying Bitcoin, PayPal announced that it would soon begin accepting cryptocurrencies and enabling crypto transactions for all of its merchants. This was a big moment for cryptocurrency, as PayPal just exposed Bitcoin and cryptocurrencies to 350 million people worldwide. And this led Square's CEO Jack Dorsey to invest $50 million into Bitcoin. On December 16, it happened. Bitcoin smashed through its all-time high of $19,700 all the way up to $21,000. And then from there, nothing was stopping the cryptocurrency as it hit $21,000, $22,000, $23,000, then $24,000 in an astonishing bull run. What are your thoughts on the crazy year BTC has had so far? Let us know in the comment section below. Like the video, share, subscribe for some daily crypto content. I have been Mr. Nakamoto Crypto, and I'm out.
Bitcoin under $8,000.
Buy it.
Bitcoin under $5,000.
Buy it.
Bitcoin over $10,000.
Buy it.
Bitcoin is over $20,000.
Buy it.
Bitcoin under $8,000.
Buy it.
Bitcoin under $5,000.
Buy it.
Bitcoin is over $10,000.
Buy it.
Bitcoin is over $20,000.
Buy it.
Best performing asset in the last 10 years. True. Look into crypto, we need volunteers. No need to tiptoe, it won't disappear. Do your research, history made it clear.